if you tax plan and that equals less tax, or you do nothing but should have paid, then those are two system errors or system issues we got to figure out what to do about. So David Quentin has suggested this in his metric. This was on the far right hand of the screen where he gave the example of the employee and the independent contractor. You don't necessarily realize, oh, I'm supposed, like the Uber driver, oh, I didn't know I was supposed to declare and pay tax, so I just didn't. So that could be a system problem, which looks like tax evasion, but might not be motivated by a criminal intent or intentional planning. And then there were people that weren't doing it, he called them lucky, weren't doing anything, but it turns out they weren't subject to tax. For me, there's no avoidance there, there's no evasion there, so it's irrelevant, not a system problem. The system's working fine. But here you have two issues. The system, something's wrong, maybe, possibly. You're tax planning and that reduces tax, the individual is, or the taxpayer's not doing something they're supposed to be doing and they should have paid tax, okay? So if we start there, then we know for sure that the system has a detection threshold. So in either one of these cases, either the system detects or does not detect the issue. Either it does or does not. It's binary. So let's follow the detect path. So David Quentin said if you tax plan and you have less tax and it's detected and it's pursued and the taxpayer wins, he concluded, not tax avoidance. One conclusion is that's not tax avoidance, or you could conclude that it's effective tax avoidance. Either way, the system has not failed. You were seen, you were pursued, you win. Everyone would agree, I think. It would be hard to say that the system has failed. Now, that's not to say it's perfect because judges make mistakes. So let's not pretend that there's no errors ever in the system, but generally speaking, as far as the legal system goes, this is about as good as we're going to get. But what if it's detected and it's not pursued? So here we have a systemic error. It's detected. We know you did something that we're not sure if we like, but we don't go after you. If it's not pursued and you would lose, then we have a system error. So first question for me is this route detected, not pursued, and would lose? Is there an equivalent in minds? Because if it's detected and pursued, what's the opposite of win? Are those the same systemically? And so I think in David Quentin's metric and in the way you would describe things, David, if you tax plan, you get less tax, you're detected, and you're pursued, and you lose, you were a tax evader. And that's true, actually, even if you did nothing, you should have paid and you didn't. Were you detected? Were you pursued? And did you lose? Tax evasion. So the Uber driver that doesn't declare their income is a tax evader, just the same as Google in Italy, detected, pursued, and lost. You could call that tax evasion, or you could call it, if you want to be kind, you could call that ineffective tax avoidance. That's fine too, I think. I don't have a stake in that rhetoric. But is that the same problem as you would lose? And we have to come back to this would, because this is a counterfactual. We'll never know. The point is you were detected, you weren't pursued, but if you were pursued, you might or would lose is a counterfactual. What should the system do if this is a possibility, which it is? And if you're not pursued but you would win, is that the same as taxpayer wins if detected and pursued? Should we not worry about it? That is, how does our system already set up to detect things but not pursue them because you would win? We don't want to fix that. That's not a problem. There's nothing to fix. You would win. So it would be a waste of taxpayer resources to go after and pursue people who would win. Right? If you're pursued, if you're not pursued but you would win, there's no point going after you. So these seem to be unobjectionable tax avoidance, or effective tax avoidance, or not tax avoidance at all. Whereas these don't seem quite so clearly. And there's a system error or some sort of problem that we're not sure if we have to fix or not. So, well, okay, what about this not detected? That is a system problem. If, once you follow that, not detected has to be not pursued, obviously. And so then you follow not detected, not pursued, but would win. Maybe that's okay. Should we fix that problem? Or not detected, not pursued, and would lose. That's a systemic problem. How do we fix that? And so what I think we see in the GARs, the SARs, all of the disclosure of uncertain tax positions and so on, what we see is we step back to the beginning step here. We're not here yet, but we go back to this step and say, okay, well, can we fix this? Can we go from not detect to detect? So what error is there in our system where we don't detect? Can we fix it? And so what you know, a not detection is an administrative problem. Is it capacity? Like, do we just lack the ability to do this? And is it resources? We could do it, but we don't have enough money, or we're putting it in the wrong place. We commit it to something else. And if it's either one of these, is this because of money or politics? Okay, so I think in every legal tax system, we're asking, how do we go for, why do we have this not detection problem built into our system? Every legal system has this problem. And which one is it? And then which one is that? And should we fix it? And so on. Because this could be a cost-benefit analysis and a rational decision not to pursue if the not detection and not pursued and the taxpayer would lose, but the money is small. You might just decide not to pursue it. But that's only the first level order of error. Once that, if you could fix that error, and that's, I think, a lot of what we see in internal domestic politics is trying to fix this error, because we think we're trying to get to evasion, and we think evasion is about detection. But it's only partially about detection because there's also pursuit. So we also have to ask, well, what are the systemic errors that lead to lack of pursuit? And those could be rule ambiguity, capacity, same as before, or litigation risk. That is, you might detect and not pursue because there's rule ambiguity, you don't know if you're going to win. You might detect and not pursue because there's a capacity problem. You might detect and not pursue because even though there's not a rule ambiguity, or there is a rule ambiguity but it's small, and even though you have a capacity, it's not worth it. It's a cost-benefit approach, okay? So if you detect, you don't pursue, and you have these are the reasons. But a death by 1,000 cuts, you keep doing this and the taxpayer would lose, and therefore there's evasion unanswered, then it's not enough to solve the detection problem. You also have to solve the pursuit problem. Well, here's where we have to try to figure out, well, I said this looks like avoidance or effective avoidance or not avoidance. And all of these, detect, not pursued, or not detect, not pursue, where there's this or this, that looks like evasion. Those look like evasion or ineffective tax avoidance. But the problem is this word would. There's a whole world of something in between would lose, a counterfactual we can't prove, and loses. And the world in between them, somewhere in there, is would probably lose. And what should the system do when we actually don't know? Because this is a counterfactual, and because we have made a bunch of decisions 2 steps back in the chain that have hampered our ability to be perfectly informed about our own decision making, we get to this place where, well, you probably would lose, and is that also tax evasion? Or is that abuse? Is that aggressive tax avoidance? You know, we're using a lot of words to try to capture that you would probably lose. And in a country like the United States, like the UK, like Canada, if you get detection and you get not pursued because of a bunch of decisions to be made, and the problem arises or people get upset about it and the political metric changes, you can put money into this to counter whatever strategic things the taxpayers have been doing. But until you do that, the taxpayers will continue to be strategic. So this is how I think we understand David Quentin's metric, a little bit about Ewer. David, a lot of stuff that you were talking about is in here. I'm not perfectly capturing it, but you get this sort of basic picture. But I told you I wasn't going to talk about the taxpayer. I wanted to talk about the state. So now think about BEPS. Just change your focus as if we were now not talking about taxpayers at all. Now we're talking about states. Don't we have the exact same problem playing out on the international stage, where now states are actors who are contributing to a process in which each state stands in relation to the others in this position of detecting or not detecting, but rather than tax or pay less tax, what we're detecting or not detecting is an adverse behavior by another state that affects how your taxpayers experience your tax system. So now the action you're looking at is not what the taxpayer is doing, or not only what the taxpayer is doing, but what the taxpayer is doing either in conjunction, collaboration, or collusion, or facilitation by the foreign state. And so now look at our world as OECD comes at it when we get to BEPS. Oh, well, do we know that the other country's system is like this? Subpart F rules, CFC rules, hybrid mismatches, debt equity, the Luxembourg CPEC, the Belgian notional interest. These are known. These are known to be systemic mismatches. Do we pursue or not pursue? And do we not pursue because of rule ambiguity and therefore cost? And so we're taking this route and saying, well, we don't know if the taxpayer would lose, they might not lose, they probably would win or they might win, and so don't detect. So you can see a lot. I think the least progress BEPS items are the ones that are detection neutral. We know about them, but we're ambiguous about whether we should do something about them or not. And the most attention, I think, in BEPS, and I'll explain my rationale for this, is in the not detected category. So where are the minimum standards in BEPS? What are they pointing at? The big one, the glaring one, the one that everyone's responding to? Country by country reporting, which is very clearly a detection error fix. We've got a detection problem, we don't know, and you have the mandatory ruling exchange. Very clearly a detection. And so the idea, I think, of BEPS is, yes, we know about systemic problems that we've created, but we are choosing not to pursue them for various reasons on the international level, some of which are these, but when we come to states, some of which are the politics of tax competition. And maybe the majority of them are. And so those are uncomfortable. When we start talking at the BEPS level of, well, we know about these holes in the CFC rules and so on. Well, but the thing is, we are competitive. We're in a competitive world, and we are using our tax system to promote innovation, promote investment in our countries. And the OECD should not be in the business of shutting down good, economically useful tax competition, because we don't want one world government. But when you see the not detection problem as a state-sponsored problem or a state-level problem, that seems to be where the OECD is much more comfortable telling states, you've got to cooperate to overcome these detection problems together. And how are we going to do that? Well, we're going to use capacity, we're going to increase capacity, and we're going to dedicate resources to these things. So the minimum standard, which the OECD is saying all countries have agreed to impose on themselves. The minimum standard reads, adopt CBC reporting procedures for a 3-tiered reporting system of master file, local file, and CBC reports. You're familiar with this structure. And second, adopt international agreements and procedures to automatically exchange CBC reports. So, but if you read deeper, there are these additional prescriptions that don't yet look like minimum standards. But that's because I think it's in this level. We're trying to figure out what are we going to pursue, what are we not going to pursue. We're making this decision about if once we have detection, what then? Once we fix the detection problem, do we pursue? We have detection now. Do we pursue or not pursue? So here they are. Undergo periodic OECD monitoring of CBCR implementation. That is, we're going to check to see, to make sure you're doing this thing so we have detection. Revise allocation rules to attribute risks to related parties on the basis of control and financial capacity. There's a substantive rule, which is a prescription in the action plan, which is a pursuit. Now we've detected, now we pursue. Revise allocation rules to prevent legal ownership as the sole determinant of source of income attributed to intangibles. Once we have detection, we can adopt a rule that will allow pursuit. Revise allocation rules to attribute value to companies that perform important functions. Again, once you have detection, once you solve the detection problem, you can move into pursuit with different rules. Limit non-controlling companies to risk-free return and so on. So that's the CBC. But I see the same thing in the IP regime. Modify existing, the minimum standard. Modify existing IP regimes to use a nexus approach. Use agreed grandfathering rules if modification will include transition rules. Now that looks like a substantive rule, not a detection rule. That's because we detected the patent box. We're aware. We don't have a lack of detection problem. We have a pursuit problem. And so listen to the additional procedures in the IP regime. Adopt procedures to inform the OECD Harmful Tax Practices Forum if tax benefits are provided to specified assets. That looks again like a detection problem to be solved. Implement and apply hybrid mismatch rules in accordance with policy objectives of Action 2 report. Undertake internal periodic review of the operation of hybrid mismatch rules as necessary to determine whether they are operating as intended. Make information about hybrid mismatch exchange procedures available to taxpayers. That could be a pursuit rule. Let taxpayers know we're on your trail. Adopt procedures to spontaneously exchange statistical information with respect to specified IP-related rulings. The OECD is saying OECD countries and BEPS associates, if they're on the BEPS platform, if they're on the train, OECD countries agree to adopt measures to monitor, to spontaneously exchange statistical information. That looks like a detection issue to me. And adopt measures to monitor and gather data on companies benefiting from regimes to promote development in disadvantaged areas. The OECD is not saying they're going to pursue this. The OECD is not yet saying we have a problem if you're using location-specific advantages. But it's a detection issue. We want the information in our system so we can decide later, should we pursue location-specific incentives? So if you look at the taxpayers' behavior in the world as if it was divorced from what the state is doing, I think you miss this story, which is that the OECD is fully aware that states in the world are actively encouraging taxpayers to avoid taxation through international schemes, and fully aware that it's not aware of all the ways in which countries do that. And the CBCR, the big news from BEPS, the big story from the CBCR is to get that latter question solved. And so this is my prediction. I'll put it here, and then we'll wait 5 years or 10. Once you have the detection problem solved, you fully move in the international arena to, well, should we stop you? Now that we know what you're doing, should we stop you? Are these things okay? So far we have said, we know you're doing patent boxes, we're going to watch, we're going to monitor, we're going to ask for more information, but for now we're not pursuing. We're not pursuing your patent box. But when we get more information and detect all of these things that you're doing with the patent box, we might change our mind and start pursuing. Now, if we pursue at the level of the international, what does this look like? Here in the taxpayer case, we were talking about taxpayer wins, taxpayer loses, taxpayer might win or would win, taxpayer would lose, and then this very difficult, conceptually difficult area of, would probably lose. Well, what about in the arena of states? Here, I think now what we're saying is that OECD countries have decided that the issues they wish to pursue are those of detection of practices that OECD countries have identified as being potentially damaging to their revenue base. But what the OECD has not pursued, not built in, are detecting ways in which the tax system disadvantages the poorest countries in the world or less developed countries in the world. And therefore, unless this, the platform on collaboration on tax and the integration of the new global forum, unless that builds in a detection cycle for things that are of concern to countries that are not OECD countries, then we will already be on this path. We've got detection solved, and now we're deciding to pursue or not pursue the practices that the OECD has already identified as being the ones worth pursuing. And we will not be working on detecting the kind of problems that the OECD has not put their time into. And I think this is why, for developing countries especially, when there's an agitation about participation and legitimacy of the OECD and equal footing and so on, I think this is where I think a lot of the concerns come up. Because if you don't have the information that you need, if you can't get what you need, if you can't have the questions you have answered, addressed in the forum, then you'll never get to this place where the OECD, having detected the policies of its own member states that impact low income or non-OECD states, will never pursue those practices. But if you can get your issue on the table at the detection stage, then the OECD will have detected, and it will be harder for the OECD to say, we know there are all these actions out there that harm developing countries, harm OECD countries, but we're still not going to pursue them. It's much easier not to pursue things you don't know about than it is to keep not pursuing things once you know. So this is my my metric of, I think, how things are unfolding with the BEPS initiative. And just to assure you that I have no answers to this interesting phenomenon, is to say what we'll see in the next few years is BEPS implementation. And you'll be able to test what I said, what I predicted was that we would go from detection into pursuit, and you would get more harmonization, in theory, through the OECD, because all of these practices have been detected, and now it's harder not to pursue them. But they will continue to be OECD focused. And so that means the pressure on this system, I think, will increase or even maybe increase. Will it stay the same or even increase vis-a-vis those countries that weren't there to say, that we have our issues that are different than yours. For us, it's not about politics. It's not even necessarily about tax competition. It's about resources. They just are lacking. And if you don't give us a way to address these really the complexity that David talked about, and the rule ambiguity that's always a theme in tax avoidance, then it doesn't matter. Even if you detect we can't pursue, and the OECD won't pursue it on our behalf. So I don't have any good news, I don't think, other than to say that once we understand the state as an actor that has its own agenda and is not standing in relation with other states as an enforcer and cannot play that role the same way it can as it can for its own taxpayers, then I think we should be asking ourselves, what kind of regime we're building for the future of income taxation. That's all I have. Thank you very much.